Hi traders, Nick here recapping March 12th. A green day, all around bullish day, cannot dispute it. A bounce that's overdue, and that's the point. It's a bounce that's long overdue. We've fallen hard. And to put that into perspective, let me show you just the last few days. We fell from up here down to down here. We've been have not had a bounce, not here, and then two false bounces, 1, 2, and here we are, a legitimate bounce. It started iffy, but then closed pretty strong. Back into it was a little iffy throughout the day, but not by much. Immediately out of the gate, we ran up. This is the S&P, and right here we had a couple of ramps, and Apple was a star today. I thought for sure it was going to be challenged because of this action right there. I mean, there is no need for this. As soon as it opened, went down to 121, and then with minutes it was $2 higher. Doesn't make sense. This is a too strong of a stock to play around like that. There's no change, and then it took over the day right here. If you were watching the market and you thought to yourself, okay, this is where it took over the markets, right? Ramp, and then the markets broke out with it. So Apple was a star today, and it shined exactly where it needed to. And then a big ramp right here where everything broke out along with Apple. Small caps led the way up. They were strongest. The Dow and the SPX were trailing a little bit behind. The small caps were up 1.7%. The Dow up 260 points to 1.5%. SPX 1.26%, so that's about 26 points. NASDAQ lagged. It was up 30 points, though, almost 31, but still 0.72%. The NASDAQ had bad news from, I think it was Intel, and also Microsoft. They were the laggards there and dragging it down, I think. Let me see here before we speak. Look at that. Boom, Intel down almost 5%, Microsoft 229, and Qualcomm, eBay, and Baidu. So very few. Look at the Russell. How green is that? So 2 days, Russell's been telling us it's not that bad, and now everybody listens. Dow, okay, so I tell you always, why? Why did we run up? Apparently, economic reports in the morning were bad. Retail sales were weak, blah, 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 so they bought the market. Because bad news is good news, because Yellen is probably not going to raise rates soon enough. So that brings a fork in the road next week. If she comes out and removes that patient word, markets are going to go back to freaking out. If this is all about rates, because if we bought the rates today and we sold them the last couple of weeks, last couple of days, next week will give us a reason to, is another checkpoint for that. If the word patient is out, I believe we're going to go back to selling. If it's not out, we may get another leg up. So be careful with shorting next week or going long next week too tight. Leave room. By that I mean either don't do next week, go out to following weeks and credit spreads, or do small debit spreads, or make sure you're balanced. All right, so what can we say about today other than that? Oil, oh my gosh, is 46.86, the low of the day. Closed around 47, down 2.5% almost. Other than oil, the TLT and the TNX were in play today. The TLT started out huge up and then went all the way down on a bad auction right here results, but still closed fairly flat, actually a little red. Much better than the TNX, though, which is the flip side. It started out so weak and then recovered throughout the day, but still closed red. Does that make sense? We'll look at them over here. They are important, okay? They do drive our markets, rates and bonds. So rates, we're still hampered, right? That's a doji candle if you've ever seen one. Doji is indecisive candle because they try to, they open it here, they try to run it, they try to sell it, and they end up closing it pretty much close to where they opened it. They kissed this line. So this line had been resistance, and they broke out of it. Now, is it support? Maybe, maybe not. So, but we're still tight. The range is tightening. There's energy. If I were to bet, I'm betting on the low side. Why? Because of several things, but instinct is one of them. So I want to see it hold this. I want to see it hold that. I want to see it break this. So I want to see it break that. You know what I mean? Lower lows and lower highs is never good. That's why instinct tells me that the TLT may win this fight. The TLT bounced at 126 and then fell one day, recovered immediately, and now we're working on breaking out of back into the 130 where I told you I drew that little thing yesterday. All right, that's those two things. The NASDAQ today was incredibly strong. For a little bit here, we thought, well, how did that happen? That's weird. The NASDAQ was here and then disappeared. So broke my kryptonite pre-open, 42.98. I was so excited to mention the kryptonite level. That's the 4,300 level. And then ran up and then meandered, almost broke down right here. Everything was iffy right here until Apple said, get out of my way. I'm going to take everybody up to the moon. Boom. Okay, so we're still 43.30, not that far away, but in much better shape. So let's look at the candle for everything. Before I go, small caps, emphatically strong all day. Didn't look back for a second. All right, so let's look at the ranges because I love to do that every day. Without it, how do we know? This is 6 months, so let's keep it at 6 months. That's that dashed green line. So we needed to bounce off of here for the bull's sake because we didn't want to see a breakdown, and we did. So what happens tomorrow? We'll soon find out. Actually, in about 12 hours. Here's the candle size, as big as yesterday, almost. Not bad, not bad. So that's encouraging. All right. So does this mean that we're out of the woods? No, but it's a good start. Qs. Those are the NASDAQ. Okay, so the NASDAQ, I told you these two green lines need to hold up. So I'll draw something here to keep us in check. That's not horizontal, but you know what I mean. So yes, are we going to break down and fall through to here, or are we going to stabilize and go up from here? So it looks like it's a good start. Like I said, we're not out of the woods, but it's a darn good start. Let me see if I can connect some lines here that make sense. That's how my lines show up, by the way. I can do it this way. That's being proper. Or I can do it a little higher. So this is an area of importance. The next few candles are very important. Volume is also good. How about the small caps? They're in the best shape. Look at that. I mean, people are crying, oh my God, we're going to collapse. We're just like, this is all-time high. We're like right there. This is all-time high of 123.78. We are like 73 cents away from it. We can't be upset with that on strong volume. So this speaks volume. This speaks loud, very loud. We opened at the low. We closed at the high. That's incredibly bullish. So we'll see what happens tomorrow. However, this is this is where it's failed before, basically. If you want to draw a dirty line right here, let's see what it does. So tomorrow, really important, and it's Friday, and it's the 13th. Uh-oh. All right. So this is it, and let's look at Apple. Did it repair all the damage? Remember a couple of days ago I said there was some technical damage done? The small caps definitely repaired damage. The other two are working on it. The SPY for the S&P and the triple Qs for the NASDAQ. So Apple, yes, it bounced just over the green box, which is of interest. I was wondering if we can hold that. It's a washout between those two candles, so I need another candle to break the tie. So far, it's a tie, and the selling was heavier volume than the buying, so I need another day to break the tie on Apple. Tesla was red today. Baba was red. Baidu were red. Baba was kind of red, flattish. Priceline almost broke down today. I was so excited. I don't know why. But anyway, Priceline, today it had rumors that it was going to buy somebody, and it was towards the end. It had a plus $9 open, and then it faded, plus 10, actually 12, and then it faded, bounced, faded. Right here, it looked very ugly. Had it lost that area right there, it would have gone down. But then rumor comes out that they're buying somebody, including Yelp. I don't think they have enough money to buy Yelp. They'll have to give up equity in their own company by giving swap stocks. I just don't see it happening, but that's the rumor. So if you're excited about that, you bought it into the close. All right, so this is it. Let me see. I did have some thoughts. Okay, the thoughts are that the bullish people are so quick to leave their bullish thesis based on a couple of bad days. They thought, okay, rates are going up, and now they go, oh, you got to be cautious, you know, disaster coming, blah, 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 next meeting, the meeting afterwards. Then they get one green candle, and then they go on CNBC, and they're saying, we're going to new highs, bye, 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 the bull is still alive, and like nothing happened. So you can't just abandon your thesis in 24 hours and then flip back to it the 24 hours later. It's just ridiculous. Trade your thesis until the actual variables change. Nothing has changed. She's going to raise rates. Tomorrow, next month, 2 months from now, she's raising rates. Trade that, period. And then they say things that are contradicting, two contradicting statements in the same paragraph. Like somebody would say, okay, today's rise was because of the euro, because the euro was stronger today, one bounce in a month or whatever in 6 months. Here's the FXE will probably give us the best exposure to that. Yeah, red, red, red. Look at that collapse, and then we get one green tick, and suddenly, and then people say, okay, it's because of the euro, and then you say, all right, so we're going to new highs because there's no rate cut. So which is it, the euro or the rates? Just trade your thesis already. All right, and as far as QE, I think we got a glimpse today as to what they're doing. They're buying higher than they were supposed to because of the shorter number of days on their first run. Somebody named Kerr, last name is Curre or Kerr, C-O-E-U-R-E with an accent. He said they're buying faster, but I think he also put the kibosh on the fact that they're not going to go beyond the dates of 2016, I think September or something like that. So it is open-ended, but not really because it has an end date. But that means that it could end earlier, in my opinion. And that's really what data-dependent means. You know, it cuts both ways. Yes, it can go on until we need it, but not beyond 2016. And we could end it earlier because if the data flip to being very bullish and suddenly we get CPI rise. So for QE in Europe, we need bad economic reports coming out of Europe. Otherwise, they're going to start thinking, oh, the QE is not going to be as aggressive or as long. Oil down in the dumps. We talked about the ranges. We talked about the TNX and the TLT. A couple of stocks that people asked me about were Intel, CSX, and UNP. Let me see if I can get you up to speed on those without getting it out of the window here. There you go. UNP, Union Pacific, they were asking me you know, if they would do a credit put spread or how would you trade it. I want to see it, how it handles this green line right here. It's an important line because if this breaks, this might be next. So I don't want to catch a knife yet. I need another green candle to see if this little bounce is worth it. The other one is CSX. It looks like it put in a couple of green candles here, so maybe CSX credit put spread could be worth it here if you can find any premiums. But you have to be careful because of this channel that was headed down and we erased it. But it's kind of a choppy stock, so I would really need some good premiums for me to go along it. And if it does bounce, maybe it's headed towards the 35.50. But then again, that was a level where it's failed a few times, even though it poked above it. All right. This was Intel today. Bad news, and look at that bad candle. So. Bad candle, bad candle, bad candle, bad candle, boom, bad candle. That's because it let go of a lot of tail up here. Way bad candle. So is it headed here? I told you a while back, 30 can come fast from 223. So sometime here, I told you 30 can come fast. Well, here we are. It did break this red line. So the ideal target is somewhere around here probably. I'm eyeballing it. Is it time to go long it? I'm not so sure. If markets continue on down, this one is even more vulnerable than the other ones because they came out and said things are bad. They came out and said that. Things are worse than we thought, so be careful. They said, sell my stock. I'm going to leave more than one candle. This is decent volume. I'm going to give them you know, another day or two to sell it before I try to catch that knife. All right, so this is it. Nick signing out. If you need anything, hit me up.